Hello, I'm Jensen Huang, the CEO of NVIDIA. How is shorting my stock going for you bears? I can't just keep getting away with this, can I? My company has a forward profit to earnings ratio of 150. It's so overpriced. I am so lucky, am I not? First I shilled crypto and now I'm shilling artificial intelligence nonstop during earnings calls. So NVIDIA has to fall soon, right? It's not like me and my crew are good at strategy and have been preparing for this trend for half a decade. Perhaps you prefer someone like Gunslinger. Yeah, how is that going for you? Intel doing great things, right? Wow. Even Sir Jack Allot opened an NVIDIA short and is planning on scaling in some more. I guess he likes being Sir Pegged a lot instead. You dumb fucks didn't realize that the US government, by banning my chip exports to China, pretty much declared that we have the best artificial intelligence chips. Now, this deepfake you are watching was made on an NVIDIA GPU. Go on, keep shorting NVIDIA. It's going to work out great for you.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks closed Wednesday higher as investors assessed prospects for planned US-China trade talks and digested the Federal Reserve's decision to hold interest rates steady at its May meeting. And it was a very, very green day because yesterday in the after hours, we got news that China and the US were going to engage in trade talks, and that really set the tone for today's trade, where we saw just a broad-based market rally. Defensives, sensitives, tech, the Mag 7 led the charge, except for a couple of big tech names. Google was down 7.5%, and we'll talk about why as it pertains to Apple right here, which was also down 1.15%. These led the tech space lower, but was helped by the semiconductor complex, which was up in a very, very big way. NVIDIA, AVGO, and all of semiconductors, the manufacturers, the equipment hardwares, the fabless designers, and even software as a whole. Very, very positive stuff. In fact, the only red we saw in today's trade in tech space was stuff like CrowdStrike, Uber, Fiserv, Arista Networks, and this all had to do with these companies' earnings. They all released earnings within the last 24 or 48 hours. But it was a broad-based green day. We only had a couple of sectors here that were in the red: the real estate, communications, and material sector. Every other sector gained, with the S&P 500 up 0.47%, but it was a very, very volatile day. At one point, most sectors were in the red, and then we finished the day off in the green. Gold was down 1.5% for the day. Small caps gained, mid caps gained, large caps gained. It was a bullish day through, and it all really stemmed off, yes, the talks, the trade deal talks we had with China, but also the Federal Reserve's decision to hold interest rates steady at its May meeting. And Jerome Powell said that we, aka the Fed, are not going to be in a hurry to move on rate cuts. Now, I just have word for word quotes from his speech. Jerome Powell said that the economy is strong, labor market conditions remain solid, inflation remains somewhat elevated. The Fed made technical decision to slow the pace of decline in the balance sheet, so we continue to see Fed tapering. He said recent indications point to a moderation in consumer spending. Surveys show heightened uncertainty. It remains to be seen how the uncertainty will affect the outlook. The unemployment rate is in a narrow range for the last year. The labor market conditions are broadly imbalanced. The labor market is not a source of inflationary pressures. He also went on to say that the longer-term inflation expectations are consistent with the 2% goal. The new administration is implementing significant policy changes. The net effect is what will matter. He says the net effect may be negative. He said, focused on separating the signal from the noise. That's what they're doing at Fed. They don't need to be in a hurry. They can wait for further clarity. They have seen some signs of increased tightness in money markets, but it's still too early to cut rates. So all in all, Jerome Powell has come out and said the exact same thing they said in the last couple of Fed press conferences, but he's still not seeing a major deterioration in the economy, but it's yet to be seen. At the same time, we also got a press conference from Scott Bessent today. He came out and said China negotiations will begin on Saturday in Switzerland. Some negotiations are advancing towards agreements in principle. Saturday's talks are beginning of talks, not advanced discussions. Pretty much, Bessent is getting ready to get this China deal done, and I think maybe sometime next week we'll get the first announcement as to what that's going to look like. At the same time, and this was kind of crazy, Trump actually had another press conference today, along with Bessent, along with Jerome Powell, and this one was during the FOMC press conference. Donald Trump came out and said he's going to rescind chip curbs after the debate over the AI rules. Pretty much there's this AI diffusion rule, which was launched by Biden. Trump said he is not going to enforce that policy anymore, according to unnamed sources cited by Bloomberg, and they're probably going to scrap the AI diffusion rule. They're going to put in their own rule, but as it is right now, it does look like chip exports and export controls are getting pulled back. And that is why we actually saw Nvidia up 2.76% today. Absolute stunning rally on the back of that news. Google, however, was down 7.29%. It was the worst performing stock in the S&P 500. And that's because Apple came out and said they're exploring adding AI search as queries fall. Pretty much Google is the default search engine on Apple's devices. They pay $20 billion for that. If Apple is looking around, and some sources said they looked at Grok, Perplexity, Anthropic. They're looking around for the next best AI LLM to implement in their search. Google is going to lose a huge amount of search queries. That is why it was down 7%, back to the $151 mark. Absolutely insane. We'll see how this plans out. Not a good look for Google. Their search moat is getting eroded in real time. We just had a couple of other market movers in terms of earnings. Walt Disney was up 10% today, and that's because it reported a double beat. It beat on revenue, beat on EPS. It also increased their guidance, right? So it raised their guidance. It adjusted its EPS outlook for the fiscal year to $5.75, which would represent a 16% increase from fiscal 2024. The midpoint was for about $5.70. Very, very good stuff. But ultimately, what drove the move here was that Disney announced a partnership with Abu Dhabi-based developer Myral to build its seventh theme park on the Yas Islands in the capital of the UAE. Essentially, they're going to be putting up another park, and investors love to see that. And when you have great earnings, a guidance raise with good news, you're going to have the stock go up 10%. And I think it can go up another 10% from here to $110 per share. Congrats to all Disney shareholders. Novo Nordisk reported its earnings today. Now, it missed on revenue, beat on EPS. And what was crazy was that the company actually lowered its guidance as well. The stock was up only 1.9% today. And that means everything is pretty much priced in. When you miss earnings and you lower your guide and you're still up on the day, that's telling you everything you need to know. It might be the time to get into Novo Nordisk right here. I think it's about to go on a massive rally. And Uber reported very solid Q1 earnings. Now, it did miss revenue, beat EPS, but trips grew 18% year over year. Gross bookings and monthly actives were up 14% year over year. They don't give guidance. However, Uber is firing on all fronts. Operating leverage is absolutely insane, but the market just wanted a little bit more out of the management team. And that is why the stock was down 2.54% today. And then for everything we saw today, we saw 3,400 advances, 2,700 decliners, net inflows in the NASDAQ 100 and the New York Stock Exchange, and market momentum continues to remain somewhat mixed. You can see here that we're still above the 50% mark in the 20-day. We've lost the 5-day moving average, and we're not seeing tangible improvements here in the medium-term moving averages. And this is probably telling us that we've hit a ceiling for now in the S&P 500. And that is something we've spoken about quite heavily this week. Now, for the better part of a week, we said that we are constructively bearish below the 5,700 mark. And until we actually get a close above there with good news and retake this high, that's when we can aim for these highs up here in the S&P 500. We haven't got that. And today was very interesting because we got all of the good news in the world and we still actually couldn't really rally strongly off the lows right here to retake the 5,700 mark. Now, we did put up a green day, don't get me wrong. This is telling you everything you need to know in the S&P 500. And the market right now doesn't just want news that you're looking at a trade deal or you're going to go talk about a trade deal. The market wants a deal signed with specifics. Then we're going to get the next move. So that is what the market wants to see. And until we actually get that, do expect downside here for the S&P 500. Now, I'm not saying we're going to fall out of the sky. I'm just saying we're probably going to drift lower until we get that news and then we'll go higher. But as long as we probably remain above the 5,430 area, as long as we remain above this yellow line right here, you actually want to have a constructively bullish outlook, looking for potentially retaking these highs right here in the S&P 500. We had a solid day across the board, gains of about 0.3 to 0.6% in large caps, mid caps, and small caps. Looking a bit bit mixed here in the extended hours. We saw China fell today. Europe and China were also down in a very big way today. Volatility continued to abate. We're now at the low 20s level. We'll see if we actually go ahead and break that 20s level. Yields fell, and then the dollar did gain ever so slightly, up half a percentage point. As a result, we did see bonds gain as well. So what we did see was sort of just a push back into US assets, investors buying bonds, investors buying equities, and selling out of safe havens like gold, like silver, like WTI. So, going from sort of like commodities into, I guess you could say, bonds and then US assets as a whole. The S&P 500, like I just said before, we're looking for support right here at the 54.30 area, looking to put in a lower high. But if we do go ahead and break this, that's where things get really, really dicey. We are in positive gamma, and generally speaking, when we do get to the top end of the call wall and the call wall doesn't move up, that is a sign that we will move lower. So there is both a fundamental and technical reason as to why we're seeing a little bit of a pullback from the highs we made earlier last week, but completely normal. And until we actually get a solidified trade deal, expect much of the same. Expect sort of this price action to do much of nothing and maybe even trend a little bit lower until we get that official confirmation from a trade deal, from that good news, and then we can rip higher in the S&P 500, in the NASDAQ 100 as well. Very, very interesting. Same trade. We're looking for a trade deal. Otherwise, you probably will drift lower. But the AI diffusion rule and those chip export controls and the easing of chip export controls can be actually very good for the NASDAQ 100, especially because 30% of the NASDAQ 100 is actually semiconductors, for those of you that didn't know. And it's not just NVIDIA. This stuff like Lam Research, AMD, AVGO, they're all in that index. And if chip exports are going to ease, we could actually see a little bit of upside here while the rest of the market continues to probably just trade sideways. The RTY looking very, very strong. It does look like it's holding this 2000 area right here. We still haven't seen a move above in the gamma flip in the core wall. So that's very, very interesting. But we are at the top end of the range. So do expect a little bit of downside, especially if large caps do much of the same. Gold was down 2% today. You can see that we actually did make a lower high relative to this wick high right here. Very interesting. So this does look like a double top formation or a lower double top formation. And ultimately, if you want to take shorts with a tight stop, you could probably aim for like the 3200 area right here, maybe get 150 points worth of alpha. But gold has been super, super strong. I wouldn't want to step in front of this in any single way, to the long side or the short side. There's just not much certainty, especially with all of these trade deals and what's happening on the geopolitical front. There's a lot going on in India and Pakistan right now, and I think some of that is exemplified in the price action we see in gold. Bitcoin continues to remain strong. We're tracking M2 money supply very, very closely. This is global M2 money supply. This yellow line, this graded line right here is Bitcoin, and we continue to make new all-time highs in global M2 money supply, looking at about the 140,000 mark for Bitcoin. That is probably our next level higher, and we're slowly but surely going there. As you can see, we did pull back to kick this week off, and it does look like we're going on a bit of a run to the upside. Guys, if you want exposure to this, go ahead and look at a ticker called IBIT. You can maybe sell, like I said, at the start of this week, you could sell some $50 IBIT puts, or maybe just get long at this level right here. Either way, I do think we're going to go higher with Bitcoin, not without some volatility for sure, but we definitely are going higher. I still do like the $50 IBIT puts, maybe look a month out, 3 weeks out. Very, very liquid asset that you could trade. Guys, looking at silver really, really quickly, if you actually look at the silver to gold ratio, it does look like silver is about to go on a massive rally. Silver's the next in line. And I think if we break above sort of like this 33, 34 area, right, that can open up some very, very high levels. You can see we've traded in this range while gold has continued to make all-time highs. Silver does look like it's poised to go higher, but that's assuming we can actually go ahead and break above this key level of resistance where we used it as resistance twice and sold off in a very, very significant way. We'll see if the bulls can take us higher. Now, yesterday, guys, I said some great stocks to buy was Novo Nordisk. I think we got the right earnings. Yes, they did lower the guide, but the stock was up 1.9% down here in the after hours. But I do think, if you want to sell some puts here at the $60 area, right, if you get assigned, you just want to hold those. But I think, Novo Nordisk is looking poised to move higher from here. Yes, it did lower its guide, but the stock was up 1.9% on the day. It's telling you everything you need to know. I think Novo Nordisk is going to move higher. Guys, another stock that I think you probably want to get in right now, if you think you missed the rally, is Nvidia. I think we're probably going to go back to the 130, possibly all-time highs, especially if we get very, very favorable curbs on chip exports. If some of these controls get loosened, Nvidia can absolutely fly, because then they can actually start selling some of those H20 chips that they actually took a write down for, or will take a write down for this quarter. Either way, I think these two stocks, Nvidia and Novo Nordisk, are poised to go higher. Diving into sentiment, this is the fear and greed index, and we are still in this greed zone right here, despite having the last couple of days or most of this week being in the red. We snapped that 9-day win streak. We still continue to be in greed territory because market breadth continues to remain solid. Market momentum is still there, and market volatility has abated. And when that happens, we are generally going to stay and hold these levels. I wouldn't be surprised if we push into the neutral camp to end the week. That being said, what we're seeing with sentiment readings is very, very positive for the market to go ahead and make higher highs. But ultimately, what is going to determine market momentum is earnings. And we have the data, the latest data here. Now, this is the change in the S&P 500 annual EPS in the first 4 months of the year. So pretty much from January to the end of April, what has the S&P 500 done? And you could see that generally speaking, we actually see, for the most part, downward revisions in the market, with the average revision about 3%. This is exactly what we've seen so far here in 2025, which is why this market rally almost doesn't make any sense. Now, there is a reason for this. Analysts haven't really been cutting their price targets as much as you would expect in such a downturn after the announcement on Liberation Day. And that's because the market believes we are going to get trade deals. However, if you look at this on a more granular fashion and dive into the changes from the 31st of March to the 30th of April, Liberation Day was the 2nd of April, we could see the S&P 500 here has had a revision of negative 2.4%. The annual revision was negative 3.1%. So the majority of the earnings move in the S&P 500 has come in the last 30 days after the announcement of the tariffs, meaning that if we don't get a trade deal and if these tariffs linger, then we could see material changes to the overall earnings. And if we get material changes to the comm services sector, the information technology sector, that's when things can get really, really ugly. For now, both of these massive sectors are holding in there relatively well, and that is why the S&P 500 is only seeing very minimal revisions, roughly in line with the historical average. And when you do look at full year estimates, things are still looking largely robust. Pro forma year-over-year EPS estimates are looking at about 11%. Now, we are down significantly from the start of the year, which was for 14% growth, but we're still looking at double-digit growth as it is right now. By the way, this green is mid-caps. You're looking at about 10% growth for mid-caps, and then this blue right here is actually small caps. So you're looking at 38% growth for small caps for the year. So the market's still very optimistic with earnings. If we do get trade deals, I think we will print these numbers right here. However, if this 90-day tariff pause doesn't get extended, we don't get a China deal, we don't get an EU deal, we don't get an India deal, expect tangible revisions to these numbers. And that's obviously going to come at the expense of the macro. Right now, Q2 GDP estimates for the Fed's GDP now sitting at 2.2%. You saw a little bit of volatility, but we're roughly here above the 2% mark. We're at the top end of the range for the blue chip consensus. The blue chip probably see around about 1%, just under 1%. So the Fed GDP now a little bit more dovish, but that is normally the case. When we look at the Citigroup Economic Surprise Index, we could see that yes, economic surprises has been trending down. In other words, since about November 2024, the economic data has come in slightly worse than the expectation by the analysts. However, we're still roughly at the zero line, which is this line right here, and we're trading there right now, which means economic data is coming roughly in line. Now, tariffs can change this materially, and the soft data is indicating that we are going to see massive revisions to the downside when it comes to economic data. However, that is the soft data. It hasn't translated into the hard data just yet. And until that happens, we got to take the economy for what it is, and it is holding up very resilient. Looking at data for the week ahead, tomorrow we have initial jobless claims. That's really it for tomorrow, and that's really it for the week. In terms of data before the open, we have Shopify, QBTS, Brookfield Corporation, Crocs, Warner Brothers, Peloton. Those are the big names before the open. And then after the close, we have Coinbase, Rocket Lab, Cloudflare, and the Trade Desk, as well as DraftKings. So actually a pretty big day here, especially if you're in like the consumer with Shopify, Crocs. These are heavily consumer-centered brands, stuff like DraftKings, the Trade Desk, right? So we're going to get a really well-rounded idea as to how the consumer is holding up with these earnings at least in Q1. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.